Thank you, Bob. It's a real pleasure to be here, dialing from Dubai, but I'm excited to be part of this very exciting conference. Congratulations to Professor Agarwal and the whole team for putting together. Oh, sorry, I think I was on mute. Okay, let me restart here. Thank you so much for inviting me to introduce the panel. This is a very exciting conference, and it's been growing leaps and bounds every single year, and it's very rewarding to see the success of the Center for Financial Markets and Policy. Today's topic is very exciting: FinTech and Transformation Financial Services. One of the most exciting investment area. We as Gulf Capital, we invest in a number of sectors, but probably the most exciting sector for us is FinTech. And the panel's topic today is really, what is FinTech? What does it encompass? How is it surviving during COVID? Is it accelerating the growth of FinTech? Which companies are doing well? Which ones are not doing as well? Where's the innovation? What's happening in the US, and how does it compare to, say, China, Asia, and Europe as well? What can we learn from the East as well? And also, most importantly, what is the role of FinTech in financial inclusion and financial literacy? They're all very exciting topics, and we have today a great panel. Essentially, we're joined by Mary Ellen Iskandarian, who's the president and CEO of World Banking. It's a global nonprofit group devoted to giving low-income women financial tools and access to finance to achieve security, prosperity. We're also having us join Kavita Jain. Ms. Jain is the Deputy Associate Director of the Office of Innovation Policy at the Federal Reserve Board. And before that, she spent a number of years at FINRA, where she led FinTech initiatives. So real experience in FinTech. And in fact, Ms. Kavita was voted one of the leading women in innovative finance in 2019. We have also Mr. Raj Khosla, the founder and MD of MyMoneyMantra.com. It's India's largest omni-channel consumer and business financial marketplace. It has dispersed over $11 billion to customers, over 5 million customers in 60 cities in India. Clearly a huge success. And Mr. Khosla has over 3 decades of hands-on experience bringing financial investment awareness and offering financial products to the Indian customers, essentially. And last but not least, we have Maqsad. He's the founder and CEO of Status Money. It's a personal finance company aiming to democratize access to financial planning and services. Sir Maqsad has 10 years experience in consumer lending and credit card industry. He used to be the head of decision management at Citi Global Digital Payments. And before that, he was at Discover Card. So clearly a lot of experience. He's also a fellow Lebanese. So welcome, Majd. As a fellow Lebanese, I'm proud of what you're achieving. Clearly, we have a very exciting panel here. And so without further ado, let us start. Good luck.
Well, thank you very much, Karim, for the fantastic introduction. Let me introduce myself a little bit. My name is Alberto Rossi. I'm an associate professor of finance at the McDonald School of Business. And I'm also the associate director for the Center for Financial Markets and Policy at Georgetown. So I work in the area of machine learning and FinTech. So trying to understand how can FinTech can revolutionize financial services, and what are the best way to structure the algorithms that go into these machine learning tools that effectively provide better advice to individuals. So I'm extremely happy for the panel we have today. So we have Mary Ellen Iskandarian from World Banking. We have Kavita Jain from the Federal Reserve Board, Raj Khosla from My Money Mantra, and Maqsad from Status Money. And before starting the panel, I'd like each panelist to maybe spend 1 or 2 minutes describing what the role is and what the responsibilities are within the organization they lead, and effectively talk a little bit about their company. Maybe we can start with Mary Ellen.
Thanks so much, Alberto. And it's wonderful to be sort of virtually back on the Georgetown campus. I'm a School of Foreign Service grad. So at Women's World Banking, as the introduction indicated, is a 41-year-old NGO that since our founding has been dedicated to providing access to finance to low-income women in developing countries. I have been the president and CEO of the organization since 2006. And as our mission really for many years was very focused in the microfinance space, but as technology really became the overwhelming route to providing access to finance to those who had been excluded from the formal financial system, we've now really exploded in terms of the partners that we're working with, and increasingly with fintech. So this organization is, or this panel is well suited. And then I might just add, in 2012, we took on another set of activities and we became an impact investor. And so Women's World Banking is the general partner for two impact investment gender lens funds, and I sit on the investment committee of both of those.
Thank you very much, Mary Ellen. Why don't we move to Kavita?
Thank you, Alberto. Good afternoon, everyone. I'm Kavita Jain. I oversee the innovation policy function at the Federal Reserve Board. I also want to thank the Georgetown Center for Financial Markets and Policy for giving me the opportunity to be here today and to share my thoughts on fintech. Before I start, I just want to give the standard disclaimer that I'm speaking here today in my personal capacity, and the views that I express today are of my own and not necessarily those of the Federal Reserve. So as many of you may already know, at the Federal Reserve, we really have a broad set of responsibilities. It includes several key functions such as conducting monetary policy, promoting financial stability, fostering the safety and efficiency of our nation's payment system, regulating banks, and ensuring consumer protection. And in each of those areas, innovation can play a really important role and serve as a tremendous source of good. It can increase efficiencies, reduce costs, make our banks safer, empower customers, but it can also be a big source of risk. So at the Federal Reserve, we are committed to fostering responsible innovation while ensuring the safety and soundness of our nation's financial system and protection of consumers. My team specifically, the Office of Financial Innovation, it sits within the Division of Supervision and Regulation at the board. And I extensively collaborate with my colleagues across the board, as well as reserve banks on various fintech and innovation matters.
Thank you, Kavita. What about Raj?
Thank you, Alberto, and thank you very much, Georgetown University, for inviting me here and giving me the opportunity to learn from all of our wonderful co-panelists. And I am Raj Khosla. I'm the founder and managing director of mymoneymantra.com, which Karim had sort of shared some figures with you. But in the year ended March 21, mymoneymantra.com originated $1 billion of credit and 7 million happy customers. In October, we were in 105 cities in India. We worked with over 100 banking partners. And I started this company in the year of the Lord, 1989, with a princely paid-up capital of $15. So, currently, we are a physical plus digital outfit, and have actually combined artificial intelligence, machine learning with the traditional model to service our customer base. And that is exactly what we pride ourselves on doing, is to find customer need, link it with the banks, and right in the center of 800 million customers who in India, 800 million is the number of people who are less than 35 years of age, although they may not be what we traditionally call middle class, but they're certainly an aspirational class. All of them require a credit card, a personal loan, a home loan, and so on. So we are, mymoneymantra.com is slap bang in the middle of this, perennial demand on one side and suitably capable supply side on the other. So that's what mymoneymantra.com does.
Thank you, Raj. And last but not least, Mad.
Hi, Alberto. Hi, everyone. Alberto, thank you for having us, and same to Georgetown University. I'm glad to be with you guys today. My name is Majd Maqsad. I'm one of the co-founders and the CEO of Status Money. It's a 4-year-old company focused on personal finance in the United States. We fuse social media with personal finance to help change people's behaviors through peer benchmarking and crowdsourced financial guidance and advice. We currently serve over 300,000 people in America, young, old, frankly, rich, poor. One of our key goals is to democratize the access to financial planning and advice, typically something that has only been available to those who have $250,000 in investable assets or more. Happy to tell you a bit more about how that works, but I'm very glad to be with you today.
Thank you so much, Mad. So before we get into the details of some of the questions, let me start with a broad question. So different people have very different view of what fintech is. So to some people, fintech is cryptocurrencies and blockchain. To others, it is the disintermediation associated with peer-to-peer lending platforms. To some others, it is instead machine learning algorithms that allow robo-advice and automation. So very briefly, could you give the audience an idea of what fintech signifies to you and what are the most transformative aspects of fintech? And maybe we can start with Mad.
Sure. I'll tell you a short story. I spent almost a decade at Citibank and before that at Discover, a credit card company in Chicago. And I remember maybe about 6 or 7 years ago, Citi's CEO standing up on a stage, a new CEO at that, and saying, we're a big data company. Guess what? Big data was a big buzzword back then, right? That CEO lasted maybe about a year and a half. There was a lot of turmoil. And the next CEO came in and said, hey, guess what? We are a marketing company. That CEO came and went, and the next one said, hey, we're a fintech company, right? And none of those things were arguably false, right? The company does have a lot of data. It certainly does a lot of marketing and it has a lot of infrastructure and technology. But the thing for fintech that really makes it fintech in my mind is the ability to use technology to create a financial service that wouldn't have been possible without that technology, right? And an example is cryptocurrency. Before we had the processing power and the distributed ability to communicate across the world, we could not have cryptocurrencies. So that is legitimately a fintech invention. Another example, I think, is the delivery of financial guidance and advice through video or through other digital means, something that was not available before platforms like Zoom that we're on right now. So that, to me, I think holds the key to what fintech is and a lot of the promise as technology keeps progressing at an exponential rate.
Mary Ellen?
No, I love that story, and I think that that says a lot about that mirrors a lot of my thinking. I guess what fintech really sort of means to me is an opportunity to accelerate financial inclusion and work around some of the obstacles, particularly for women, that just bringing people into the traditional formal banking system, is still really problematic. 1.7 billion people worldwide are still without any access to finance, and the vast majority of those, practically 1 billion of that number, are women. And so we're really excited about sort of the ubiquitous nature of that, that phone in your hand and what kind of power that can give. Now, one caveat that I always raise is that there are 300 million fewer phones owned by women than they are by men. And there's an over 20% on average gender gap in the ownership of internet access enabled phones by women. So the technology gap cannot be disregarded and really could be a limit to the enormous potential that we see. But at least the fintechs that we're coming into contact with are, you know, working on the ground, really focused on customer experience, on user experience. And it's so many of those kinds of issues that hold women back and don't make the formal financial system available. And it's precisely that really customer focused, design focused nature of fintech that is going to let us really not necessarily leapfrog, but just push ahead. The IMF has put some really interesting data out there about how financial inclusion through traditional mechanisms is actually stalling. And we really run the risk of decline. And so so fintech allows us to, to pick up the ball and keep running forward.
Perfect. Thank you so much, Mary Ellen. And why don't we go to Kavita?
Yeah, I think those are both really just good overviews of fintech. The one question that I get asked often is the use of technology is not necessarily new in the financial services industry, particularly in the US. So why is this different now? And, we also hear that we're in an era that many call the fourth industrial revolution. And so what we're really seeing here is a confluence of both demand and supply drivers that's really changing the provision of financial services as we know it. So on the supply side, we're seeing rapid acceleration of digitization, mobile devices, availability of massive troves of data, cheap storage, high computing power, and all these innovative technologies like AI and machine learning that are really creating new opportunities and new abilities. And then on the demand side, consumers are demanding, faster, better, cheaper, newer ways to manage their financial lives. And so driven by these different supply and demand factors, firms are now creating very different transformative business models and products across all aspects of financial services, right? So whether it's making deposits or lending, payments, investing, financial planning, insurance, all of these are just going through a big paradigm shift. And the other thing I should note is that probably, 5-7 years ago, fintech was a term that many used just for startups, right? So it's a fintech firm that's offering this product or this service. But I think now fintech is just simply used as a term to denote a new disruptive way to provide a financial service or even just conduct a particular business. So banks are using technology not just to change how they offer products, but they're also using it to make their middle office, back office functions more efficient, more effective, right? So we hear all these buzzwords like soup tech and reg tech, and it really is all part of the same family, so to speak. So I think fintech just denotes a very broad term, covers products, services, how they're offered, covers startups, covers incumbents. In fact, banks are also now investing directly in technologies or partnering with startups. Some banks have innovation labs. Some are making strategic investments in startups. So it really is a very, very broad term, but ultimately it denotes the disruption of how financial products and services are offered.
Thank you, Kavita. And Raj, if you have something to add?
Well, yeah, I'll try and add something because, with so many learned people and, and a great elaboration on fintech and its transformative power. But basically, to me, at a very mundane level, fintech is really a means to an end. A lot of people talk about fintech and building technology. To me, it has to serve an end. It has to be a road getting to some place. And for me, that place is really, through my eyes, and in a very narrow sense, for my money mantra, it is the customer. We have to identify customers' need, identify it swiftly, and satisfy that in an appropriate manner. And also, when we deal with banks which book these assets, then that has to be a quality portfolio. We have to use fintech towards that end, whereby we are able to service customer need, and also, if I can use the word loosely, park these assets or create a portfolio in the hands of the banks. That portfolio should be a quality one. As far as how I see it as transformative, again, in a very narrow and mundane sense, if I can say that, for me, fintech's transformative power is when it hits the tier 2 and the tier 3 cities, where when credit is made available, maybe small credits, maybe a small loan, to the real, if I can, again, the proverbial small guy who doesn't have to rely on the corner money lender, and we are able to bring that customer into the organized sector at an appropriate rate of interest instead of something very high, and therefore actually deliver financial inclusion in the real sense, because a product has been delivered. It's not only dissemination of knowledge, but we actually serviced a customer and brought that customer into the mainstream. So for me, that is a transformative element of fintech. Thank you.
Thank you, Raj. I've always talking about transformative events. We know that COVID-19 has been extremely transformative. We know many countries have been locked down for months. And while the virus has been disastrous for many economies, there is a silver lining in a sense that it has led to a very rapid increase in fintech adoption in many countries. So I have a couple of questions for the panel. Which countries do you think experienced the greatest increase in fintech adoption? And do you think that this increase in fintech adoption constitute a structural change, or do you think we're going to revert back to normal business after COVID is over? So whoever is willing to take it.
Should I?
Maybe Raj, sure.
Okay. As far as the lockdown is concerned, frankly, I think it's a reasonable guess to assume that that India actually had the most severe and the most stringent lockdown. Going, in fact, for 2 months, there was I think the world press also picked it up. The misery that lockdown caused, but that is behind us. And now, as the pickup is happening, the economy is picking up, but only gradually. All I can say is there are decades when nothing happens, and then there are weeks when decades happen. And I tell you, the past few weeks has been exactly that. You asked about how much digitization was going on. Yes, we were down that path. Every year, we had more technology in our lives, in our banking lives, if you like, than we had the previous year. But like they say, necessity is the mother of all invention. And once the lockdown was in place, it suddenly picked up speed, the digitization speed, and how, especially more so on the payments side. We saw that for, I don't know what it would be in Europe or in the United States, but in the Indian context, in the month of October, we had 2 billion transactions on the payment side, which is a doubling up from what it was in April. So that's how digitization came into being. And as far as lending is concerned, personal finance, whether it was eKYC, which frankly could have happened 2 years ago. But well, we'll get there. And finally, there was no choice. They had to get there. So we have eKYC. We have so much information, so much documentation now, moving over the online as opposed to physically. A stark example of which I'd like to share is when you make a home loan, obviously a valuation takes place. The valuer is disinclined to enter someone else's house to make a valuation report. The owner of the house is also equally disinclined to let an unknown person into his home. So here we go. The banks devised alternative methods of actually doing a physical valuation without entering the property of the intending borrower. And this is something which could have happened earlier, but it didn't. But well, like they say, cometh the hour and cometh the man. So so this happened, and now we see tech adoption is now much more than what it was earlier. And will it be reversed? Was your question? Frankly, I think we will go back once we have the vaccine. We will go back to a more hybrid world. We'll never go back to what we were earlier, but we won't stay in the digital bubble either. We're all human beings. We like to connect. We like to compete. We like to emote. And frankly, in a very basic way, we all like to make more money. So, if there are 50 people meeting, discussing things, what's happening, discussing opportunities, the chances of making, of getting ahead are much more than, for instance, a virtual connect. So yes, some of it will probably go back to the old world, but there will be a hybrid world going forward. That is generally speaking. Talking about ourselves at My Money Mantra, similarly, we could have made that data lake. We have actually 55 million customers on our data lake. It's sitting on AWS at the moment. And we could have had much more artificial intelligence, much more machine learning than we currently have. And we would have gotten there maybe 2 years later. But again, the lockdown forced us to get here where we are. And we remodeled our operations. We've actually come back in October to our highest ever monthly revenue life to date, believe it or not. But this wouldn't have happened without having actually used the machine learning, used the data analytics that we did. So we are actually a microcosm, which reflects, the macro picture altogether. And we are no different from what's happening in the world. So that's what I think is going to happen.
Perfect. Thank you, Raj. And do we have any other one wants to take it? Okay, let me just move forward. Like more broadly, I think that, and this is kind of a question more for Kavita, we know that new technologies are often very difficult to implement if the regulatory environment is not favorable. So as someone that is deep into this at the Federal Reserve, how do you think the US is faring in the adoption of new technologies compared to Europe and China, for example? And what do you think are the main barriers to tech adoption in the US?
Sure. I think actually the US is faring quite well in the area of tech adoption. And I would say there are a number of factors that drive that. First of all, we have a technology sector that's unparalleled in its dynamism, in its creativity. I don't think I need to name some of the largest global tech companies that are based out of the US to make my point. But to take that a step further, the US also has a very vibrant financial technology sector. I'm thinking, of course, about Silicon Valley, about New York. They both have very thriving fintech ecosystems, but there are numerous other tech hubs in the United States as well. In fact, I just read a report this week that noted that US has 22, I think, of the world's top 100 fintech hubs. And these fintech hubs in the US, they're churning out innovations at a really rapid rate. They're leaders, not just with respect to specific technologies like cloud and AI, but they're also leading in how technologies are transforming financial services, right? So like lending and payments and wealth management and even RegTech that I mentioned earlier. And since this is a Georgetown conference, I should note another important factor is the American academic system, which provides a lot of fundamental science and ideas and research supporting the use of technology. Moreover, I think by and large, the US investment community and financial firms understand the strategic importance of investing in technology. So I mentioned earlier, financial firms are setting up their own tech labs and innovation hubs, but they're also actively investing in private tech companies. And we're seeing that play out with technologies like AI. So for example, according to one research report, at the end of last year, the US had the world's largest investment market in privately held AI companies. I think it noted that the US investments accounted for nearly 65% of global investments in AI companies. And then finally, I should also note that, you know, US regulators, both at the federal as well as at the state level, are devoting significant, serious resources to fostering innovation in the markets that they regulate. I mentioned earlier, we use the term responsible innovation a lot, and that really denotes our desire to promote and to facilitate innovation, but at the same time ensuring that our markets stay protected, our financial system is safe and sound, and that consumers are protected. And so at the Fed, and also at other agencies like the OCC, the FDIC, the SEC, we have set up dedicated innovation offices that focus entirely just on facilitating innovation. And we're working hard to coordinate and collaborate with each other. You know, we have a very different regulatory system here in the US that has proven successful over many decades. And so, you know, we're working with each other to collaborate on matters related to innovation and really work more on an interagency basis.
Thank you, Kavita. And yeah, so staying always on this topic, I want to ask a question to Raj. Like, given your experience with India, what do you think the US can learn from India and India learn from the US when it comes to fintech adoption?
Yeah, you know, I'm going to try and be politically correct, and then and not say that, you know, there's so much learning. Who's going to learn from whom? What we in India could do maybe a little bit better, and which frankly, for instance, you know, the United States certainly does really well, is that there is a whole ecosystem whereby fintech is able to actually provide, if we talk home loans and we talk small towns and we talk you know, small ticket lending, where the fintech lenders can go to these you know, to whether large ticket, big cities, great, but medium cities, small ticket, small towns, you know, nationwide, you know, fintechs can actually go and engage with the customer, probably assist in finding the property, and also, you know, disburse a home loan and make a homeowner out of that person. They don't keep the loan on their books for more than 3 months, 6 months. They're secure in the knowledge that this entire asset can then be securitized and moved to a government-backed, you know, two companies, Freddie Mac and Fannie Mae. You see, this entire ecosystem enables so many more people to access home finance, to therefore become homeowners. And it is easy for the smaller companies, the smaller fintech companies, to go and approach each customer and move that portfolio and all of their portfolios out to these government-backed Freddie Mac and Fannie Mae type companies. And I think that this has enabled so many more citizens of the United States to become homeowners. And if we could follow the same route, I think, you know, it would help the general population in India as well. Turning it around, frankly, you know, 10,000 kilometers away, I don't know what, you know, too much about what the US could learn from India, except, and I'm estimating this, you know, is that like the United States, India too is a very diverse country. I mean, someone living in the north of the country in Punjab has as much in common with someone living down south in Canada as, for instance, someone living in Sweden has in common with another person living in Greece. So these are very different people, different value systems, and different needs, different cultures. And I think there is a fair bit of diversity also in the United States. I think, and I repeat that, I only think that, you know, India may have done a somewhat better job of actually finding the differences between their needs and the different marketplaces in the same country and customizing the product offering, you know, to diverse groups. I think in the US, maybe they're trying to look for a common denominator, in the interest of scale, and to offer this a similar sort of thing, to the population as a whole. Maybe that is something, the customization and the localization is something the US could learn maybe from India. But I mean, who knows?
Alberto, could I just pop in
Of
for
course.
half a minute on this?
Yeah.
I'm really grateful Raj just threaded that minefield very, very adeptly. But one thought that does occur to me is India was one of only 2 countries, Peru was the other, that targeted its government COVID response payments to women. And it had an immediate impact of, if a woman, had a bank account in her name and didn't know it, it made her, much more active. We saw literally millions of bank accounts opened for women. And there is a raft of research that shows when a government payment is directed to a woman, family, nutrition improves, more members of the family see greater benefit from it. So, that's something we might have thought about in the United States about really calling out a targeted payment to women if we were looking to improve the family welfare. So I would just add that.
Thank you so much. No, very, very good point. Thank you so much, Mary Ellen and Raj. So let me move a little bit forward. I want to talk about specific fintech innovation. So, for example, MOD, we know that status money is designed to help individuals improve their consumption, savings, investment decisions by comparing their decisions to those of their peers in a completely automated fashion. So how did you get the idea for this app, and why is technology crucial for the functionings of status, and why couldn't this be done maybe 10, 15 years ago?
Yeah, thanks, Alberto. I mean, I'll tell you, it may have been possible to get it done, but I think a lot of things need to align to have innovation actually happen, right? But in particular here, we're really talking about financial peer benchmarking, right? And, when we think about peer benchmarking, I think a lot of people, when they think about finance, it's kind of a no-go zone, right? So why should I compare myself to somebody else? What's the benefit? Something I've heard quite a bit in the past few years is comparison is the thief of joy. If you've ever heard that, it's an interesting one. But like it or not, we compare ourselves and are compared to each other literally from the day we're born. So just 6 months ago, my wife and I welcomed our beautiful baby girl to the world. And within an hour, we knew that she was 60th percentile weight, 90th percentile height. I mean, that, is a beautiful comparison, right? And it gave us a gauge. It gave us information we didn't have before. And as we grow up, we know how we're doing academically. We know how we're, whether or not we're excelling in sports, professionally, you name it, the number of ways we compare ourselves to each other. So why not finance, right? Why can't we see that our spending is ridiculous compared to people who are making a similar amount of money, living, next door to us, also renters, maybe they have a similar credit score. And we really couldn't come up with a good answer. It's an anomaly of the money taboo and maybe people being a little bit overprotective with their data, which, by the way, is available, right? The banks have this data. The networks have this data. There's a lot of companies that have this data. It's no longer something that people need to volunteer. So really, it was that thought coupled with a lot of research that was coming out from companies like OPower and others that were using, peer benchmarking to get people to change their behaviors, whether it be to reduce their energy expenditure and use more energy efficient appliances or reuse their towels at hotels, you name it. And, my co-founder and I got together and said, hey, we're data scientists. We know how to get this data. We know how to put it together in a way that could be helpful. So hence the concept of status money was born. And one of the things that is absolutely crucial for the functioning of this is kind of open data, so to speak. Financial aggregation, another word for it. Something that I've been waiting to see kind of implemented on a regulatory basis in the United States. It still works. I think it's not as seamless as it can be. I hear the CFPB is going to pick it up, in the coming few years in this new administration. So I'm really hoping for that. But on top of this big data infrastructure, it's not just financial, peer benchmarking. There is a slew of new technologies that are going to be born out of this. And I think some of the fears around open data that have been voiced by financial institutions and others are going to turn into them welcoming this technology once it is available, either by acquiring companies that do innovative stuff or by using their own new kind of innovation hubs or whatever you want to call them to develop services that they couldn't have done earlier. So yeah, very excited to see that happen.
Thank you, Maud. And I think more broadly, and this is a specific question for Mary Ellen, what do you think are the major fintech innovation that have been extremely successful in improving access to credit and financial inclusion around the world? And so do you see also a big difference from country to country when it comes to the adoption of these new technologies and their success?
So yes, I mean, every country has its own nuances, but sort of to get back to what we were saying earlier, I think we're really seeing fintech writ large addressing obstacles and barriers, and so in many countries, we are working specifically in a case in Nigeria, for example. Credit bureaus just either don't exist at all, or don't include credit history in very small loans, or don't record how well you pay a retailer, or what your utility, your credit record is in terms of paying your utilities. And so those are the kinds of things that women typically can build credit histories with. And so you've got, many women entrepreneurs around the world not with credit histories. And so we're working with a digital lender in Nigeria who are all in the supply chain of a large, global fast-moving consumer goods company to help them access supplier credit using the aggregators that they're already buying from and that sort of credit history that they've already got. And the digital lender is supplying the data to the National Credit Bureau, so helping them build that record. The biggest obstacle to women entrepreneurs accessing capital everywhere in the world, I don't know whether here in the United States, but I'd hazard a guess, is women are far less likely to own physical land or real estate, which to a far too great degree, many regulators still require as the only form of collateral for a loan. And so we're starting to see some, again, really interesting fintech models around asset-based financing. There's one, again, I have Nigeria on the brain here. There's a company called Lydia that we like a lot that's been, that's established a digital platform to act almost as a traditional factor of receivables for both very small entrepreneurs as well as much larger companies. Women's World Banking has had a FinTech Innovation Challenge specifically around women's financial inclusion in partnership with the Monetary Authority of Singapore. And we saw a 43% increase in applicants from last year to this year. So we're very excited that more companies are recognizing that real opportunity. And I think some of the some of the business model aspects of our two winners, and we get to name two winners because they both then go on to compete on the final day of the Monetary Authority, the Singapore FinTech Festival Hackcelerator Day. But the first one is a company called MyAgro that works with smallholder farmers in several African countries. So, you know, the farmer is the least well-served of the already underserved population. And in Africa, the vast majority of smallholder farmers are women. And so instead of a credit model where they lend to the farmer to purchase agricultural inputs like seed or fertilizer, they use what they call a layaway. So those of you who grew up in the United States know this old concept of a layaway, but if in fact it's really saving in a digital wallet. And when the farmer builds enough into her digital wallet, it immediately goes to the agricultural equipment and supply company. So again, super simple, but totally meeting a need. And of course, we know that as soon as you get those kind of inputs into a farm, you can increase productivity and profitability, and you know, all sorts of good things happen. And then just very quickly, the second winner is South Africa's first digital bank, which is called Time. And again, they did not necessarily choose to go after the women's market, but they've seen their greatest level of activity has been in savings deposits, interestingly, and those are primarily from women. And part of that was sort of baked into their model in that they do have what we find incredibly important to reaching women is a hybrid of the in-person, so some level of touch so that you can build the trust with the organization, and as well as the convenience of the technology. They sort of partnered with a nationwide retailer, Pick n Pay, the largest supermarket in the country. And so they have their in-person ambassadors to sort of get the women started, and then they build a digital account, and they can do all of their banking digitally, but that initial interaction is in a place where women are very likely to go with other women. And so it's been very smart in kind of, you know, behaviorally looking at where women are most likely to form the level of trust and convenience that they would need in order to join the financial system.
Fascinating, Marianne. Always staying on this topic of access to credit, of access to financial services for females. Raj, at My Money Mantra, do you have specific programs or features that are targeted specifically to female consumers? And then also we can maybe have Mad answer the same question at Status.
Okay, thank you, Alberto. I have to defer to Mary Ellen for just for 10 seconds and say that you know, the ladies are, at least in India, our interaction over the past 3 decades, you know, to female borrowers, female consumers, is that I think that, you know, and with full respect to our male brothers, I think the ladies are really way ahead as far as financial planning is concerned, though they may sometimes take a back seat, but they're very good at financial planning. And on a lighter note, they're also great at bargaining. So in India, the gender ratio in the workforce, you know, these ratios are a little bit skewed. As we talk, currently 26% of our workforce are ladies. And as far as entrepreneurship is concerned, the ratio is even more skewed. There are 8 million female entrepreneurs versus 50+ million, you know, men folk who are entrepreneurs. Now, given this backdrop, I must say that again, Mary Ellen really picked that out. You know, what happened in the lockdown and how the money went into the accounts of the ladies. The much maligned government agencies have actually done a superb job as far as encouraging the ladies is concerned, you know, on the financial services. We at My Money Mantra go out of our way, you know, to make sure that, because a lot of these schemes are quite complicated and frequently not that well advertised. So some of the ladies, especially in the tier 2, tier 3 towns and cities, may not be aware of, you know, what's on offer for them and what are the advantages that are available for them. So we go out of our way, you know, in our communications and our digital marketing campaigns, you know, to educate, or rather educate is too pompous a word, to share knowledge or to share information which helps them take better decisions. An example or two of these is most banks have an interest break of 5 to 10 beeps, for female borrowers, and more so if there's a purchase of property and the registration is required. If there is a lady a purchaser, the registration fee is 4% of the property value as opposed to 6% normally. So we go out of our way to, and sometimes it has a social impact as well. If we say, make your wife or make the lady a co-borrower, or a co-purchaser or a co-owner of the property, it will make more sense to, financially to do that. It also has some very nice social, it gives more ownership to the ladies and makes them part of the household. And we've actually gone really out of our way, to make sure that in all our transactions, we try to tell the borrower that how it would be helpful for them if they include a lady on the, on the transaction. We've also been working with women-centric NGOs, also to impart, again, learnings, and so that all the ladies have full information when they're going into, for all the schemes and the benefits that are available to them. And once more, I think, like I said, the much maligned government agencies have actually done a good job, as far as the, female consumers are concerned in India. And we at My Money Mantra make sure that their rights are fully known to, to the borrowers, to the female borrowers.
Thank you, Raj.
I mean, that was, I don't know if I could top that, but I'll tell you, interestingly, our service is a freemium model, so it is available to quite literally everybody in the United States. But we find that our members tend to be 60% female. And that was an interesting discovery for us and very interesting insight. Women tend to have the purse strings in the household. And they are, I think, as Raj or Melian said, they tend to be more the planners in the household versus the men. So we have seen that break, and that's something we're very happy about. But primarily, our focus is really on making sure that we're serving lower income communities, right, and lower income individuals who have been left behind largely by U.S. fintech. With developments around crypto and developments around investing and robo-investing, I think focus is generally on folks who are to use the, I think SoFi coined the term Henrys, right, high earners, not rich yet. That's not our focus. Our focus is really on the mass market and even individuals who make less than $35,000 a year. The way that we serve this population is firstly making our subscription free for anybody who makes less than $35,000 a year. So they can get full access to our financial planning tools, our financial tracking tools, the benchmarking, and coming in just a couple of weeks, financial coaching with certified CFPs that they can have a 30-minute call with a CFP once a month. Nobody else out there that I know of is offering anything similar to that. So that's part of our mission to drive value to them. One of the other kind of interesting features that we've developed is a rewards program, not unlike cash rewards programs that are associated with credit cards, except this one pays people to take advantage of some of the recommendations that Status Money's app delivers. So the app might say, hey, why don't you, you seem to have enough money set aside in a checking account, why don't you open up a high yield savings account? And if they do that, the app will deposit money into their Status Money rewards balance. So they can actually earn money for making smart financial decisions and managing their money. So we pay them. That's obviously something that has attracted lower income individuals to our app as well. The last thing I'll say here is one of the things that we recently started doing is working directly with employers, particularly large employers who have an employee base that is generally low income, minimum wage or near that. And we're offering them to subscribe to Status Money Premium on behalf of their employees, effectively offering financial planning and advice tools to a group of individuals that certainly wouldn't qualify for, I'm sure, what the executives of these corporations get in terms of financial benefits, from large advisory firms. So that's how we're trying to bring financial advice and planning to the mass market.
Thank you so much, Mad. We are 5 minutes away, and we have a lot of questions that came in through the chat. Let me just select a couple and throw them at you. So the first one comes from Stephen Oriole, and he's asking, I'm curious what each panelist's view would be on the #1 thing to increase transparency in the system. Is it regulatory? Is it innovation, efficiency, tied to purpose? What would be the one actionable thing that would increase fintech adoption?
I can go first. I think it's all of that, right? It's trust and transparency and communication. But what's important is it's all of that across all stakeholders. So, transparency and trust with consumers, with your developers, with your employees, across all departments within your organization, making sure that your tech people are talking to your legal and compliance people, and with regulators as well. I don't think there's one answer. I think it's all of the above, doing it often, doing it frequently.
Perfect. So the second question is related instead to data privacy. So we know that recently California passed a law that limits the usage of data without individuals' permission. So effectively limiting potentially access to data for fintech firms. In what ways do you think this will have an impact on fintech, if it will, and how?
I mean, maybe I'll jump in on this one. I'll tell you, I largely support these regulations. I think a lot of data has been misused, and to a degree, consumers are actually not aware about how their data is bought and sold and used without their explicit consent. So I see that going in a positive direction, where consumers are finally going to get a say in how their data is sold or shared or used. One of the things that we've been very clear on from day one with our platform is any data that is provided to us will never be sold. And I think that's just smart. It's smart business, right? In my career, I worked with an individual many years ago that said, use regulations as a guide for product development, because those regulations are telling you something about where the market is going, right? And we're not just talking here about where the regulatory market is going, but where consumers, where their heads are at. So, I see it as a positive development. I think fintech will, in fact, do better because of these regulations and not worse.
Yeah, perfect. So let me just throw another final question before we have to close this panel. So we know that several studies have shown that access to credit has been limited to women and underrepresented minorities. And we also know that fintech and associated machine learning has, there can be two kind of outcomes. We could potentially go into a direction where all these biases could be completely reduced, or maybe this machine learning algorithm may kind of perpetuate these biases. What do you think will be the outcome finally, and what do you think is the best way to kind of train these machine learning tools?
Well, algorithms are designed by people, and I think that's, we can never, ever, ever forget that. And so to the extent that the people designing them recognize their unconscious bias, I mean, it really is quite literally, whatever bias you put into the machine, it just continues to relearn. I mean, you've seen, on the one hand, peer learning platforms have been very good for women entrepreneurs because they are sort of an alternative source. They typically use alternative credit scoring, but we've also seen in China, which has had, you know, the most active market, we've seen women tend to get smaller loans. They tend to pay higher interest rates. So, you know, even with the technology, there's just a lot of bias that needs to be made conscious and corrected for.
Okay, well, this kind of brings our panel to a conclusion. I would like to take a moment to thank Mary Ellen, Mad, Kavita, and Raj for their great insights. And I wish everybody a good continuation of the conference with the digital asset panel.